one thing that's really important as you're developing as a trader, and this is whether or not you're trading stocks, futures, or FX, is you're building a playbook. And what we do with traders on our desk is we're training them to trade professionally for our money, is we take them through a program called Trader Development where they actually build that playbook. And what happens every day, you're not going to see your favorite setup, or maybe not your second favorite setup. But if you develop a bunch of trades, we like to say arrows for your quiver, what happens is pretty much every day there will be at least 2 or 3 great opportunities. And so I just want to take you through a couple of these. And if you have any questions on those, I will certainly look in the chat if you have a specific question, and we'll go from there. So the first one is CAMP. This was, I believe, a few days ago from the morning meeting, camp. And if we look at the next slide. So one of the things that we do that's for stocks that are in play, and those of you who know us, we're known, our specialty is finding stocks that are in play. There's a bunch of reasons why we trade stocks that are in play, and we go through that in detail in the DNA training program. But it improves our risk reward and lowers our risk. So looking at this chart here, and it's also in these videos, which I'll give you a link to at the end. What we can see very clearly here is we've identified, after the news came out, it traded up to this blue line here and failed. And one of the things we do is when the market opens, we look at the first move. In this case, we can see a lot of volume came in and it was bought, and it blew right through this top blue line. What that tells us is this is what's known as an opening drive play in a stock with fresh news. And once that triggers, I will get long the stock as close to the blue line as possible. Then what I look for is some sort of tight horizontal consolidation. And this so happens to have the perfect type of consolidation that we look for. The reason why we like tight horizontal consolidation is it's very clear what your risk is, because if it breaks below that circle, we get out and we know that's where we're at. And we also know when we're right, which is if it breaks to the upside. And so that really is the quintessential textbook fresh news, drives above the pre-market high and then consolidates, and that's a trade you want to be involved in.